What's up, guys, and welcome back to another Sunday prep video. And in today's video, we're going to do a very similar thing as last time and run through a specific calendar. But this time there's been some changes, and the changes are due to something that was said last week at Jackson Hole from Jerome Powell about interest rates. On Friday, we saw the market move straight up, but it was straight up based off things that are a little bit different than what we're used to. We saw a heavy outperformance on the S&P versus the Nasdaq, and this is something that has to be paid attention to. There's a very specific sector that I want to be watching into end of year due to its sensitivity based off interest rates, and I'm going to go ahead and share that with you guys in today's prep video. So without further ado, let's jump right into the charts. So before we get started, I just want to remind you that today's prep video is going to be on the lighter side, and the main analysis and where you need to head to is the pre-market live stream every single morning starting at 8 a.m. This is where we get up-to-date information, and that's the type of information we need as traders. We need to be up-to-date every single morning, seeing things that are changing and staying on top of trends. So make sure to tune in at 8 a.m. every morning on YouTube, but today will be a good refresher and overview of some things to be watching in the next few weeks. Now, the thing I want to go ahead and start with today is that divergence that I pointed out in the intro of today's video, and that is right here on the S&P 500 futures versus the Nasdaq futures. On your chart, you are looking at a white chart, which is the Nasdaq futures, and the red and green chart, which is the S&P 500. And we can see here that there was a large divergence right here between the Nasdaq and the S&P. We can see that the S&P really closed just around 0.7% higher than the Nasdaq futures, whereas it was very consistent prior, right, moving together very, very tightly. But look at the Friday move, a large divergence, and this is something that you need to be paying attention to. So let's go ahead and talk about some S&P 500 levels before we jump into some individual chart setups. So here on the S&P 500, we can see that we saw a very strong move into the end of week based off the comments from Jerome Powell at Jackson Hole. But where it came off of is very important. We can see that we had these previous lows right here between 63.60 and 63.70. Now, why is this area so important? This was the previous FOMC lows. This was also Meta and Microsoft earnings back on July 30th. So we can see that this low came in very strong here, which was the same low that held Wednesday, Thursday, and Friday of last week. So that's going to be a major spot heading into the next pretty much end of year, right? We need to be putting that on our charts and making sure we know whether we're above or below that low, because that's a big, big spot. Now we can see we basically ripped through the 64.30, 64.60, and now we're sort of holding around the 64.76 level. Now, why is this important? I'm going to go ahead and zoom into the 30-minute chart and show you why this is an important spot. So right here at 64.76, we can see that this was a previous high from Tuesday of last week. This was also where the S&P 500 saw an aggressive move to the downside off of. And on Friday, if we go down to the short-term time frames, we can see that 64.76 was the exact low that held into end of day. So that 64.76 will definitely be a line in the sand next week about whether we continue higher or we get a pullback, which is necessary. We can see that if we hold above this high right here, I would assume you're going to see all-time highs at 6,500 and 6,508. Now, if we get above all-time highs and we continue to hold above it, then upside it is. However, this large move to the upside definitely warrants some type of a cool-off and a quality pullback for new long opportunities. Now, where do I think the best pullback is? Now, of course, I'm always someone that likes those deeper pullbacks because I can get really comfortable down at key demands. And so for me, the best pullback is going to be back to this high right here, these highs right here, and the high from Wednesday of last week at 64.30. If you pull out a Fibonacci, this would also be a 50% retracement right here back to 64.30. I would love to see that pullback long set up. We'll have to see if the market wants to do it. The only way we get that pullback to 64.30 again is if we fail under this high from Tuesday and these highs from Wednesday, which did a really good job at holding Friday end of day. So we have the 64.76, we have the 64.30. Those are two really interesting spots. And the only other spot that I'll be watching is these lows from 2 weeks back around 64.60, which did a fantastic job of holding Friday intraday as well. So we can see right here, after that big push on the Jerome Powell comment, 64.60 did an incredible job of holding up into Friday and into end of week. So the three levels that I'll be watching on the S&P next week, 64.76, 64.60, and that really interesting pullback at 64.30. All-time highs, just slightly higher, really pretty much there as we speak. Right now, if we pull out this tool, we can see that we are just about 0.35 off of all-time highs. Now, this story changes dramatically when we go over to the Nasdaq futures. You can see we have a very different story here on the Nasdaq futures. The Nasdaq futures is about 1.8% off of all-time highs, showing you that divergence once again. Now, the key hold spot that I would definitely want to see the market and the Nasdaq hold above on Monday of this week and really all of next week is this high right here at 23,450 to this high right here at 23,356. I would like to see the Nasdaq hold within this zone right here for potential upside continuation. If the Nasdaq fails back under this high from Wednesday or back under these Thursday highs, that would be pretty much a no-go for the upside, right? We're definitely going to want to see bulls maintain above these highs here and build a strong demand out of this zone below. Now, if we hold that and we continue higher, the level that needs to break here is 23,650. 23,650 right here, that is CPI lows. That is Tuesday of 2 weeks back, CPI lows, 23,650, and that is the exact high of day that came in Friday end of day. So we need to see the bulls get over 23,650 to move higher into the Monday lows here at 23,730, which is also a low from 2 Fridays back. You can see right there, 23,730. So above 650, we go 730. If we reject 650, the pullback that I'm going to be watching is back to 450 to 350 down here. Now, of course, you can see it gets interesting to the upside on the Nasdaq, right? The S&P might be at all-time highs, but the Nasdaq still has this Tuesday high at 770. It still has these previous all-time highs at 845, and it still has these major rejections up here from PPI at pretty much 24,000. So you still have some major spots to get above next week. We're going to have to be watching how the S&P and Nasdaq sort of differ all through the rest of the week. And that's going to be the important thing, staying up to date, of course, with those pre-market live streams and seeing what's going on through the rest of the week. Now, I know that I said that there was some divergence and weakness on tech, but that does not mean that we're still not watching the SMH, which has been the strongest sector for the tech side. And if you've come to the live streams, you probably remember us talking about the long opportunity forming again out of 283. 283, 283, 283, and yet again, history repeats itself. Another great long opportunity off demand on the SMH. Now, the key thing to look for this week on the SMH to see if semis can go higher is whether or not we hold above this very key 293 to 292 zone. I'm adjusting this just to get this back in green because we are trading above it now. And so you can see right there, we have these previous highs right here. We have a previous high right here. And that is going to be the zone that I'm going to want to see the SMH hold within next week. If the SMH can hold above this daily 20, hold above this 292, 293 zone, then I think you're going to see all-time highs on the SMH once again. And if that happens, my top watch next week and a trade that I'm already in is AMD. For the semiconductors, AMD, I believe, is very interesting, and let me go ahead and show you why. So here on AMD, the 4-hour chart, we can see that AMD has major lows here and major lows here. This is the major low from the previous earnings on AMD, which helped AMD to the upside back into the 180s. We can see that we have pulled back to that level and created another opportunity to potentially go long. Now, the thing that makes me extremely interested here on AMD is that we have a very low volume and straight down move here to be taking advantage of. Here on AMD, if we break over this Wednesday high here at 168.89, I do not see anything stopping this from retracing back to the daily 20 SMA, which is at $174. This is a low volume area, a pocket of opportunity that I want to be looking to go long if we get above this Wednesday high right there. If we get over 168.89, I like 174, and this will be my main semiconductor watch next week. The thing that I really like that's going on right now is we can see AMD on the 4-hour chart is holding above this 4-hour wick low and this 4-hour wick low at around $166.82. If we go to the 5-minute chart, take a look at what happened at that 4-hour wick low to end last week. Right there, right there. Very clean holds. And if we can get above this Wednesday rejection area, right around that 168.89, and this high day from Friday, I think you're going to see a move right into this 174. That is going to be a very key watch. We have to hold this 166.82 area. Now, the interesting sector that I said I wanted to talk about today was the XLY, and that is consumer discretionary. Consumer discretionary is where people spend money when maybe they have a little bit of extra cash in their pocket. If rates go down, you would assume that people may have some extra cash in their pocket. They start spending on things for their house, Home Depot. They start buying things on Amazon. They go to TJ Maxx or Lululemon or things like that more often. And that is very interesting. You can see right here that the XLY had a monster Friday and pretty much was the leading sector of the end of week. We can see XLY with a green, just a god candle to end last week, straight to the upside, heading into these all-time highs. Now, I'm not so much going to be trading this sector with the ETF, but I want to be watching what's going on around it. If we go over to the Analyze tab on TOS, we can see what are the major holdings in the XLY, and the top two stocks we love, Amazon and Tesla. But Amazon definitely going to be an interesting name here if that XLY continues to be strong. That is the main 22% weighting in that sector. Now, other names down here that are interesting, TJX, I'm going to be reviewing that one with you guys today because there's a very interesting setup, but you can see the list is pretty long. There's 30 more holdings that you can go through here and see what you can maybe find a nice setup on. Lululemon is another one that's very interesting, has been taking a very large beating, but maybe there's some sector strength that could rise this to the upside. So make sure you pay attention to this sector, I'd say in the next few months. If we continue to see a little bit more of that dovish feel from the Fed about cutting rates, this is going to be a sector to pay attention to. So with Amazon being the head of that sector, let's go ahead and take a look at what we have here. And we can see Amazon last week pulled into a very nice demand around $220. We also need to remember that this was the earnings move to the downside. So Amazon is sort of climbing back through that earnings downside move, holding back above this major demand at 220 and reclaiming a very key 226 high right here. So next week, I'm going to be looking to see, is there a pullback long at 226? And is there a potential long off that daily 20 SMA? Now, if we can clear out this 230 high right here, right there, and get back above these lows at 230, I could definitely see Amazon making a run towards this 234 major rejection point. So let's see if Amazon has some strength over this 226, over 230, into 234 next week. And if we zoom out a little bit further here on the 4-hour chart, if we can clear out that 234 spot, I don't think there's anything stopping Amazon from revisiting that 240 high from the earnings move. And this would be an incredible opportunity back up to the high of that earnings. And if that sector stays strong, Amazon will lead this to the upside. Over 240, you're really only looking at all-time highs. If we go to the daily chart and get 5 years, right, you are right back into all-time highs if you get over that 240. And if that sector, like I said again, is the strong move leading this market, this is definitely a stock to be paying attention to. That's one. The next one that's a little bit of a flyer but has been an incredibly strong stock, TJX. Not a stock that we typically trade, but look at this trend and look at this strength. Now, why is this interesting? Well, because there's a break and retest setup. And if there's a break and retest setup, my eyes are focused, right? And so we can see right here, we have a major previous high of between $135 and $135.85. This is a major previous rejection point on TJX that made it move lower into the daily 200 SMA. We had an earnings move that squeezed above that major rejection point up to $145. Now, guess what? We just retested that major previous high. And if we go into the 1 hour chart, we can see that that major previous high is the exact level that is potentially looking to hold here into next week. 135 to 135.85, that's the major previous all-time high. If we can see TJX maintain this level and start to curl higher with the sector strength, that is definitely something that I want to be watching in the next coming weeks. So we have a major SMH watch, we have a major AMD and Semiconductor watch, we have a few ancillary watches, TJX, Amazon, on the XLY sector. This is an interesting sector that I want to be watching. Now let's go into Bitcoin, because there's been a really nice pop of a major demand on Bitcoin and also Ethereum breaking to new highs. So this could be an interesting trade next week as well. We had a very key pullback on Bitcoin to $112,000. We were yelling and screaming about this all last week on the live stream. You can see that Bitcoin had a very positive bounce off that 112,000. And if Bitcoin can reclaim this $118,000 level and get back above these lows, there could be another nice rally on some Bitcoin names, right? Coinbase, MSTR, maybe even Hood getting some of that juice. I want to see what happens here on Bitcoin at this $118,000 level next week. This is going to be key for me as well. Now, before we wrap up today's video, there are two more stocks that I want to look at. Number one is Palantir, and it wouldn't be right to do a video today without looking at Tesla and taking a look at what is potential here. So, number one, Palantir. We all know this is a stock that's been in heavy focus, has a nice pullback, gap fill to the downside, which was very, very expected. Right? No one should be surprised at Palantir filling this gap, pulling back after a pretty major move into $190. However, Palantir pulled back into a major demand. Previous highs here, previous major lows here, and take a look at where Palantir is holding up. So don't be scared about a pullback on Palantir. Think about the opportunity that is potentially out there. And so for me, Palantir, if we can get over $162, there is a very clear pocket of opportunity right here and right here between 162 and 169. That is almost $8 a share on the underlying to take advantage of here on Palantir if the market stays strong. So if Palantir can get over 162, I love this long into 169, which is also a long back into the daily 20 SMA. Now that's going to be the key level. If Palantir can reclaim that 169 and that daily 20, then you could potentially be looking at even more here. But that is for sure going to be an interesting spot and a potential rejection point off that daily 20. However, there is definitely some short-term opportunity to long into that level between 162 and 169. Now, I'm sure a lot of you remember our previous Sunday prep where we talked about the wedge breakout on Tesla, and this thing is still living and breathing. You want to be paying attention here. 280 previous major highs on Tesla continue to hold as a strong demand. We have a very clear curling move after a retest on this weekly chart, and to me, this thing looks like it could be ready. Now, if you remember, Tesla was number 2 in that XLY, the second largest name in the XLY, and if we can get over a very key $370 level here on Tesla, this thing is just getting started in my opinion. Previous lows, previous highs, and 370, I think, is something that Tesla is starting to get magnetized towards. Watching 370 on Tesla, that breakout is something that you better have on your charts here in the next few weeks. Now, if we drop this down onto the 4-hour chart, we can see major previous lows here, major previous highs here, major previous highs here, and that is $335 per share. Now, if we go into the short-term time frames, take a look at what $335 did last week. A perfect hold above that major 4-hour pivot to end last week. That, to me, is very, very important. And I don't see any reason that Tesla will stop until it starts to push towards this 347, 350 high. If we can clear out that 350 high, we are into that 363, 370, which is that major weekly rejection point. So Tesla is getting interesting. It's knocking on the door. And it's something that you want to be watching here over the next few weeks. So guys, I hope that today's Sunday prep got you excited for this next few weeks. There is definitely some money to be made out there. And if you want to take advantage of it to the best of your ability, make sure to come to the pre-market live streams and prepare with me every single day. If you want to trade live with me every single day as well, you can check out the Discord link down below. I hope you guys have a fantastic trading week next week. Make sure to prepare yourself properly, and I will see you tomorrow morning at 8 a.m. Peace out.